Welcome back to Over the Horizon, a Bitcoin podcast. I'm joined today by Steven Lubka. He's the VP of Investor Relations at Nakamoto. Steven, how's it going, man?
It's fantastic. Excited to be here. Excited to have this chat. Never a dull week in Bitcoin lately.
No, not at all. I mean, there are weeks where Bitcoin kind of channels around doing nothing. It's got a flat price, but the news just never stops rolling in. You guys are on the cusp of finalizing this deal and going public. It's extremely exciting news. You've joined at a great time. Bitcoin Treasury companies are exploding in popularity all across the United States. So I suppose we'll start with Nakamoto. And,
Yeah.
I'd like to ask you a little bit about what Nakamoto is, what your mission is, and what your role of as VP of Investor Relations looks like.
Yeah, no, great. So I think to understand Nakamoto, you first have to understand kind of its origins in UTXO, which is the kind of hedge fund that was Tyler Evans and David Bailey operated under kind of BTC Inc. So for the last, call it a year and a half, it started with Metaplanet. So UTXO was the vehicle that did the initial investment into Metaplanet, which was part of that strategic, I don't know, I want to say pivot, whatever, the strategic vision to turn into a Bitcoin treasury company. And so obviously, year or two later, Metaplanet has been a very material success. Like, it's been a huge story. It was at, I think, $15 million at the origin. It's now a multi-billion-dollar company. And so following that, UTXO made a number of other investments in Smarter Web and Blockchain Group, HK Asia, etc. So a number of other Bitcoin treasury companies in international markets. And all of those have done very well too. And so there was an opportunity to basically take that strategy and take this kind of playbook that has been very successful. It actually made UTXO the best performing hedge fund in the world over a 5 or 6 year time horizon, which is, pretty incredible. But scale it. I mean, scale it in terms of capital, scale it in terms of reach, like do this on a larger scale, especially as we're kind of at this moment with treasury companies where there is a lot of interest. And it's not just like, hey, we've got MicroStrategy and, oh, there's this new thing called Metaplanet. There's a couple over here. There's a lot of capital and momentum. There's a lot of interest that are coming into the space and paying attention to it and wanting to get exposure. And so it's I think for the team that has the DNA doing this, and by this, I mean specifically like launching new treasury companies in international markets that do not currently have a first mover or do not currently have a MicroStrategy or a Metaplanet. It's the right time for it. And my role as VP of Investor Relations, so I got brought on board to basically handle conversations with analysts on Wall Street. There's a lot of them. I've talked to dozens of them in the last couple of weeks. So the analysts are coming, the investment banks are coming to, they want to understand, they want to look at this. There's appetite for this industry. Also handle, communications with shareholders, how we're talking to our investors, how we're talking to our shareholders, and just broad communication, period. So just how are we telling the story? Not just the story of Nakamoto, but the story of treasury companies, right? It's a new concept. Most people don't understand it. There's a lot of different terms that get thrown around. And so how do we want to talk about that? And so that's, I think most of what the role covers.
I love it. And really, this is ground zero for the next stage of corporate finance, I believe, right? Like Bitcoin and, basically all the way from 2009, 2010, when it got its first market price, all the way up to last year. It was largely retail. The story was driven by retail, crypto attaching its coattails to Bitcoin and doing all these scammy things offshore. And in a very short period of time, obviously Strategy did this in 2020, but since the ETF launch, in a very short period of time, we have moved quickly from the primary cohort of buyers and people interested in Bitcoin being the retail investors, and now it's moved entirely, not just to pension funds and endowments and other folks who are buying the ETFs, but to Wall Street, to these huge investment banks who are extremely interested in helping these companies go public. You tweeted yesterday, and you alluded to it, that You've had a lot of calls with analysts on Wall Street. You just talked about it there. Tim Kotzman actually quote tweeted that. And he said he recently had a call with an investment bank. They have shell companies ready to be purchased. They just need leadership for Bitcoin treasury companies. I've never seen this type of interest for Bitcoin before. This is something entirely new. Where do you think this is coming from?
Yeah, so I think there's a few different pockets of interest. And, I would separate demand to launch new ones, which is obviously a fee generating activity for banks, right? Like there's, if you're a bank, you'd love to launch these all day because you make money on it. So that's a separate pocket of demand, I would say. But there is kind of I think there's another sort of demand. It's investor demand, and it is for the structure and for the vehicle. And so I think like the thing that people need to understand, and we can circle back. I'd love to share some of what analysts are saying, so how Wall Street's actually thinking of this. But the key concept to understand is that a public company has access to financial tools and tooling that an individual can't access. So let's say you kind of take as your base case, Steven Lubka, I log on to a brokerage account, or I log on to Coinbase, or I log on whatever, and I take $100,000 and I buy Bitcoin. And now I own Bitcoin, and that's like my cash position. Can public companies have a lower cost of capital than that? Either via equity sales, via preferred sales, via other tools that only public companies can access, that I can't issue preferreds, I can't sell equity myself as an individual. And do those offerings lower their cost of capital to acquire $1 of Bitcoin versus buying in cash that they have to generate from cash flows? The answer is yes, absolutely. These are way more efficient machines. And I view the Bitcoin Treasury Company in part at this stage it is just it's a vehicle which takes full advantage of public financial offering to maximize Bitcoin acquisition at the lowest and most efficient cost of capital. And this is also, I think, this is the story that I think makes sense to Wall Street. And this is when I've spoken with analysts and I've spoken with people that really understand this stuff. They're like, yeah, it's obvious why they trade at a premium. And that was funny to hear because like you go online, there's a lot of debate about the premiums of why did these things trade at a premium, like bubble, irrational, etc. Speaking with kind of analysts, they're like, yeah, of course these trade at a premium. And it's because they kind of understand how financial markets work. And if the simple fact that if you can deliver a growth rate, you get a multiple. That's just how finance works. And these companies are kind of explorations actually in like Bitcoin denominated returns. That's effectively what they're doing.
Absolutely. I mean, if you just consider traditional finance and you consider how to value a stock, you just alluded to it. Ultimately, all that the MNAV premium represents is markets are a forward discounting mechanism. All that premium represents is that the market feels that this company can acquire more Bitcoin per share. That's it. The Bitcoin treasury companies, the ones that are out today, their sole goal, their core underlying operating business, that's not something they need capital markets for. They leverage their access to capital markets to acquire more Bitcoin. And so from that standpoint, if you just use that definition of why these premiums are justified and you transpose it onto what this company's core strategy is, which is accumulating Bitcoin, it makes a lot of sense. That premium is just the expectation for the market that they'll be able to acquire more Bitcoin. And I love to hear that the Wall Street analysts are kind of coming around and understanding this, and they're very enthusiastic about it. How have these conversations gone? You mentioned in your tweet that one individual said nobody believed him until he sat them down in front of a spreadsheet and demonstrated how a treasury company would work over time.
Yeah.
So what have these conversations been like? Obviously, it's your job to speak with these people all day. So how's that going?
Yeah, they've gone very well. So, I mean, there's a lot of interest. I think one of the terms I've heard kind of floated around is like, oh, this is like mining 2.0. So, from Wall Street's perspective, the Bitcoin miners were the big corporate engagement. They were who was raising money. They were doing the public offerings. They were doing equity sales and ATM programs and so on, right? Like Bitcoin miners were the primary way, if you worked at an investment bank, that you either covered from a research side or supported with either trading desks or capital offerings. So they're looking at this and they're saying, oh, this is familiar. It reminds us of miners. It is actually, it's a kind of similar model in some way. Miners are basically trying to lower their cost of capital to buy machinery and energy and then generate Bitcoin from that. Treasury companies are kind of just doing it directly with purchases in the open market. But they're both kind of vehicles to, acquire Bitcoin in some ways. It's where a lot of the miners ended up, is holding a pretty significant balance sheet. But so some of these firms are kind of relating to it like, oh, this is familiar. But outside of that, so I think the analysts actually understand it a bit better. And it's funny because we already talked on the MNAV thing, but I think the MNAV makes more intuitive sense to people on Wall Street than people in the Bitcoin sphere, because they're used to thinking of this sort of, if they're used to thinking in terms of multiples, they're used to thinking in terms of growth rates. And this is very, very familiar for them. And so when I was talking with the gentleman that had to sit his colleague down with a spreadsheet, he was basically saying like, hey, as long as you have a premium, which you should have, you basically always want to sell equity within reason, and this will be accretive to shareholders. And they didn't believe him until he sat them down, put them in front of it, and said, look, like, this is how it plays out on a per share basis. For people that have been paying attention, maybe that's obvious at this point, but it gives you an idea of where people are at in the understanding of this. And I said this in my tweet as well, that I think it's a sweet spot where we have enough evidence having these conversations that this story, this narrative, this thesis, it makes sense to Wall Street. But most people are not fully on board yet. Why does that matter? It tells you we're probably still early in this trend.
Absolutely. No, I hear you there. Ultimately, what it boils down to is this: like, at the individual level, retail, like, for the last decade plus, we've all been talking about, leveraging up whatever we can to buy Bitcoin, right? Whether it's taking like a second mortgage on your house, or whether it's doing a balance transfer on a 0% APR for 18 months into a credit card and liquidating it and buying Bitcoin. And so at the individual level, this thing has been understood for quite some time. At the company level, access to public capital markets allows companies to execute that sort of trade with far more intelligent leverage, a far lower cost of capital, whether it's selling equity, which is what Strategy had been doing for 3-4 years, and then they pivoted into issuing preferreds, which are they have all of the beautiful accretion, but they're far less dilutive because they're a fixed income product. And so ultimately, not only for companies is this, they're merely executing kind of the Bitcoin maxi trade, but at scale and more efficiently. But once they achieve a certain level of scale after doing this, they can do it in a hugely non-dilutive manner. I mean, Strategy has just announced that they're not going to they're not going to sell any equity, I believe, below 2.5x MNAV or 2x MNAV. And so once you reach a certain level, you're basically solely going after fixed income markets and not selling equity whatsoever. And then at that point, it becomes not dilutive at all. Those are just my general thoughts on that, but I'd be happy to hear what your take on that is.
Yeah, so I think I've had some tweets, and I've kind of made a joke that, so there's this concept of a speculative attack that's floated around Bitcoin since, I don't know, 2013 or earlier, right? Shout out to Bitstein and Pierre. They wrote a great article on Nakamoto Institute. And it's this concept that in a fiat world, if Bitcoin exists, eventually actors are going to be fundamentally incentivized just by the monetary dynamics to borrow as much fiat as they can and buy as much Bitcoin as they can, because there's a fundamental kind of dynamic or arbitrage between these two. And this is kind of a canonical piece of Bitcoin literature that's existed for a very long time. And I was joking that, like, to understand it, you need to understand the speculative attack. It's not performed by individuals taking out a $10,000 personal loan from Bank of America at 11%. Like, that's not the scale upon which these things happen. When there really is this sort of arbitrage dynamic and there really is this sort of moment, it's going to be performed by large actors leveraging capital markets to the maximal degree that they can. And they're going to do that at scale. And that's what we're finally seeing, which is new.
Absolutely. Yeah, no, that piece is fantastic. I think it came out in 2014. We're now 11 years on, and we're seeing the trade executed at scale. In my mind, shorting fiat, buying Bitcoin, it's just central to Bitcoin's ethos, right? the reason people buy Bitcoin in the first place is because they understand the direction of the US dollar and the value of the US dollar. That's why they purchase it. The number go up is just a side effect of the thing that Bitcoin was designed to hedge against. It's just fulfilling its monetary properties. And so if you just, it's basically what these treasury companies are doing are just taking Bitcoin's value proposition and then extrapolating it out to the farthest degree, saying, okay, if this asset was designed to hedge against perpetual fiat debasement, then I'm going to borrow in this thing that's going to debase by a tremendous amount in order to buy Bitcoin. Beyond, right, ultimately Bitcoin's doing like a 35% CAGR right now, diminishing marginal returns over time. It's going to fall over time. But ultimately, like basically anything you can get below Bitcoin's CAGR that's profitable for you to essentially arbitrage out of one and into the other. And so for me, it's just so confusing why a lot of the normal Bitcoin maxis, the traditional Bitcoin maxis that are all over X, all over Nostr, just all over the place, are highly skeptical of Bitcoin treasury companies. I have my own opinion on why I think this is. I have a feeling it has to do with misrepresentation of yields over the last couple of years. People have been burned all too often. They're used to at least one scammer per cycle, the ICO bubble, Celsius, and FTX. And their kind of mental model is immediately saying, okay, this new cohort that's entered the space, that's accumulating Bitcoin, they are the next pool of con artists. That's why I think there's so much skepticism around the Bitcoin treasury company trend. I don't believe it's a trend. I think every company will be one. But I'm curious to hear your take on where you think this skepticism is coming from and how we can correct for it.
So I think you got it very correct there. There is a very poor history for financialization in the Bitcoin and mostly crypto industry, right? So people come in, they have a new financialized machine that is designed to use financial engineering to generate yield, generate returns, just keep going forever, bring kind of offerings to market. And so there's a way that Bitcoin treasury companies are financialization. And so they are flagging that same sort of, they're tripping that sensor because it is securitizing Bitcoin. It is financializing Bitcoin. It is using financial engineering to generate a return on a vehicle. And so I understand why it like sets off that sort of, whoa, what's going on here sort of sense for a lot of Bitcoiners. But also, the thing that is confusing to me, or the thing that, my pushback on that, what adoption model did you have of Bitcoin where it was going to succeed at a global level and there not be securities, there not be securitization, even there not be like a mania or a rush or even an excess, right? Like if someone's view is like, hey, this is going to turn into like a really euphoric sort of market, there's going to be a ton of these treasury companies. It's like, yeah, that seems likely. That seems, are there going to be companies that don't do well? Absolutely. I think that's likely. But what model of Bitcoin adoption did you have where this doesn't happen, where Bitcoin can grow to a globally adopted money? And at some point, public markets, Wall Street, financial markets don't wake up and say, whoa, there's an opportunity we're missing here. Because I can't think of a pathway where Bitcoin goes all the way up to global scale while surpassing most of the financial infrastructure. And in fact, if Bitcoin's going to transform everything, if Bitcoin's going to impact everything, of course, also security markets are part of everything.
Yeah, absolutely. I mean, for a very long time, my colleague Nick Bhatia at the Bitcoin Layer talks about it. I've spoken about it at length. Ultimately, Bitcoin will become the base layer reserve asset alongside the US dollar. Eventually, that will go too, but for the time being, alongside the US dollar globally. And if we talk about the total global asset value is $1 quadrillion. And, we talk about Bitcoin basically being this black hole that siphons away all the monetary premium from everything. And so you're exactly right. There isn't a universe in which businesses wouldn't start buying Bitcoin, not just businesses, mom and pop shops on Main Street, but Wall Street would not be buying it as well. And that's the world we live in now. It was an inevitability, right? On Bitcoin's monetization journey, that in order to, we talk about the equity and fixed income markets and even the real estate market, it was never going to be 8 billion people all over the world dumping all of their assets, selling all of their things, putting a rucksack on their back and buying spot Bitcoin and waiting. It was always going to be Bitcoin slowly but surely being introduced into all of these things that run global finance, right? We are a credit-based monetary system globally. And so it stands to reason that instead of Bitcoin displacing that system, all of a sudden investors stop looking for fixed income instruments. People stop getting a mortgage on their home. Businesses stop getting SBA loans. The more logical conclusion to draw would be that eventually Bitcoin would be integrated into those things and would be securitized as well. And so you're exactly right. In my mind, this was an inevitability. It's now taking shape. And it makes me very optimistic that people are still so skeptical of this because it suggests to me that we are very early in this thing.
100%. I've come to that conclusion repeatedly. Even after I announced that I was joining Nakamoto, I probably talked to 80 different Bitcoin, like people that work in the industry or people that are relatively well known. I had a ton of conversations and I was shocked at just like, I was expecting to find like way more, oh yeah, I'm bullish on this thing. I'm heavily invested on this thing. And it wasn't the norm at all. I think we're actually quite early. I think people have been kind of leaping to try to call a top or try to, call some sort of trend exhaustion. But in my opinion, it's barely gotten started. Like I said, there's a lot of interest that I've seen on Wall Street. I think capital is going to be highly engaged in these products and these offerings. But it's also just like, we just haven't gotten very far yet. In my opinion, there's a small handful of treasury companies. Yes, there's pipe deals. Yes, there's all these like kind of offerings that recently announced or maybe are coming to market. But as far as companies that are currently in market, that are currently running the playbook, you've got MicroStrategy, you got Metaplanet, you've got Semler, you got SmarterWeb, and like Saquon's and maybe a couple others, right? It's like sub 10 in my opinion that are really running it at scale, that are really like doing it. There's a lot more that have launched, including companies we've backed that we think will do very well. But like, we're not at this point of like saturation in the market where all of these companies have been going on and operating at a huge scale and deploying tons of capital. If you subtract MicroStrategy and you look at the top 60 treasury companies that are actually treasury companies, they're not just like companies that have Bitcoin on their balance sheet. The total amount of Bitcoin purchased by those companies is like 57,000 Bitcoin. And that includes the entire operating history of Metaplanet. And I'm including the DJ Trump vehicle, which did, I think, 17,000 itself. So DJT and Metaplanet are over half of that 57,000. So you have maybe 25,000 coins that were bought by the top 60 treasury companies, not including MicroStrategy, not including Metaplanet, not including DJT. It's nothing. We had a single person sell 80,000 coins via Galaxy the other week. Like, the capital hasn't been deployed yet. These companies are just not really operating yet. The large deals, including our own, are still coming to market. Those buys haven't been made yet. And even once they come to market and make those buys, there's then the machine which starts operating. Then you start raising more capital. Then you start buying. This is all ahead of us. In most capital markets around the world and internationally, there isn't even a single treasury company in each jurisdiction. We're hoping to change that.
Absolutely. I tend to think that I mentioned that people kind of have this, you can call it like shell shock, you can call it PTSD of 2020 and 2023, people losing their life savings from these 100x degen, leverage schemes. Ultimately, people believe that Bitcoin treasury companies are the same thing, that they pose a systemic risk. I believe, and I think you believe as well, that the opposite is true, that they'll actually kind of be shock absorbers to some degree. Because ultimately, these treasury companies, what does the market hate the most when any treasury company sells? We haven't seen a single treasury company who's running this playbook sell any Bitcoin whatsoever. Obviously, there are companies in public markets who hold Bitcoin who have sold, but anyone running this playbook does not sell their BTC. That's because they're acquiring it with intelligent leverage, meaning their liquidation level is, unbelievably low. Right? $20,000 Bitcoin, something that chances are will never be hit again. And they have no immediate plans of selling. And we kind of saw this narrative stress tested when, like you said, 80,000 Bitcoin, the largest OTC desk sale, the largest single sale of Bitcoin in history, was executed by Galaxy. And so ultimately, that whole narrative of these Bitcoin treasury companies being a systemic risk, obviously they haven't achieved scale yet, so this remains to be seen. But if anything, we saw a very early stress test that 80,000 Bitcoin in a managed way can be sold onto the market over the series of 1 or 2 days, and the market can absorb it fully. That's what I believe, and I also believe that as a function of that, the 4-year cycle as we know it, that kind of corresponds with a 1-year delay to Bitcoin's halving before we really begin the bull run. In a sense, the volatility in that is dampened a lot. And in fact, it might be dead, right? Bitcoin may just stair step up for the rest of time with these much smaller drawdowns than we've generally found because of a combination of these new people who are buying the ETFs, so the primary buying cohort, but also these treasury companies with no plans to sell who are just absorbing all the Bitcoin, taking it off the streets and making it so that volatility is ultimately lower.
Absolutely.
A lot of words, but yeah, give me your take on that.
So 100%. So there's two things. One, like you said, they have every incentive not to sell. The moment the machine starts working in reverse, you're losing Bitcoin per share. There's really no reason to give that company a premium, right? Like if it's not increasing. So the share value loss from that premium is going to be way larger than like some drawdown on Bitcoin, right? So it's always going to be worse for the most part, unless you think you're just timing the market with 100% of your stack. Like, like the loss of premium is going to be worse than the Bitcoin drawdown. So you have every incentive not to sell. Simultaneously, like I just said, the top 60 treasury companies, or like when I said that, I meant on the Bitcoin Treasury's website, and I meant the top 60 on that website, some of which are minors and I'm not counting, etc. So to clarify that statement. But if you took all the formal treasuries from that list, they don't even have enough coins to cause a drawdown if they sold them all. Like even if they sold them all tomorrow, it's 57,000 coins, as long as that's managed a little bit. I mean, we're talking 1% or 2%? Like it's not enough to trigger it. So it's like, to have this thesis that treasury companies are going to puke coins in mass and cause this huge Bitcoin crash, you're actually super bullish treasury companies because you're saying they have to buy enough coins to actually get to the point where they can cause that, which means they need 10 times more coins or something like that. Like you're actually basically saying that a whole lot more of accumulation is going to happen. So yeah, I think the premise is wrong. Most of all, I think you're right in that at least there's a good probability that these do become shock absorbers. Now, let's qualify that statement. It means that the losses will be borne by the equity holders, not the Bitcoin holders. And to be a shock absorber, it's saying that, yes, in this kind of bear market scenario, equity holders and the treasury companies might suffer drawdowns that are pretty material, but they'll actually cushion the Bitcoin price. So as much as you can fantasize or think about these companies getting like hugely over levered on massive stacks of coins and providing like a material challenge for the Bitcoin market, you can just as easily imagine a world where like they don't sell and they actually buy through the drawdowns and cushion it. And yeah, maybe there's enhanced volatility for equity holders, but that just doesn't transfer through to spot Bitcoin.
You just gave me a great tweet idea, and you may steal it immediately after the show, but that's okay. Bitcoin treasury companies transmute volatility from Bitcoin holders to equity holders, right? And in doing so, it makes Bitcoin a far less volatile asset, one that institutions may be much more inclined to hold. Obviously, we've been talking about Bitcoin's amazing CAGR for years, but one of the main drawbacks is it has 70% drawdown, 75% drawdowns. Ultimately, the rise of Bitcoin treasury companies as they scale and accumulate more Bitcoin with no plans to sell. Ultimately, what they're doing, like you mentioned, they're transmuting that volatility away from Bitcoin and Bitcoin holders and to equity holders, right? And ultimately, this is the financialization of Bitcoin. This is the way that it should
Yes.
have played out all along. And now that Wall Street is kind of in the game, this is exactly what is happening. And for me, it's a wonderful development. I mean, I just love to see it. It's going to bring in, not to mention these treasury companies are extremely early. There are going to be so many more, but also it's going to bring in a lot more people who may have been skeptical about Bitcoin in the past because of this reduced volatility, this increasingly reduced volatility as treasury companies scale. That meaning there are more treasury companies, and they're taking more Bitcoin off the streets.
Absolutely. No, I mean, I think it on net it should be a volatility reducer. It's you're off ramping that volatility to the equity holders, and so it's great. Now you can buy spot Bitcoin, and it's going to be kind of a smoother ride, or at least that's this thesis, and there's a material probability that this might be true. And if you want increased volatility, then you buy some treasury companies, or you take a percentage allocation. You use that to increase your volatility. You put it in this in MSTR or in this treasury company or that treasury company. And it actually gives not only individuals, but it gives capital markets participants an easier way to configure these positions and holding, as well as obviously, you can do it with the ETFs now. There's options on the ETF, but you also have option strategies. You have these other products. And so it was inevitable that this sort of financialization was going to happen for Bitcoin. It was inevitable that the market was going to evolve in this way. And it was inevitable that people were going to use the tools of public finance. They were going to use public vehicles to acquire this asset because, frankly, public markets are underexposed to Bitcoin. They don't own enough of it. But let's think about the end game a little bit. So we're in this kind of monetization phase. So we're in this kind of land grab or land rush or whatever. And it's a race. It's a race to get as much Bitcoin as you can before the price goes so high that it's hard to acquire that number. But eventually, everyone knows, eventually this dynamic quiets down. You can't run this exact playbook forever into infinity, right? There's some sort of compression. And so what happens at the end of that? I think there's two kind of popular outcomes or likely outcomes to me. One is obviously, okay, eventually MNAVs compress, and eventually I think there's consolidation. So I think larger companies acquire smaller treasury companies, or the smaller treasury companies just fail or aren't successful or whatever. So I think we have probably an expansion of the number of treasury companies this year, next year, etc. Eventually that shrinks into, a handful or maybe a decent number of winners. Probably at least one in every international market, a handful in the US, etc. And then some percentage of those companies basically back into operating businesses. So they find a way to take the Bitcoin on the balance sheet and actually use it to produce a return. That could be a financial return in terms of some sort of financial offering, lending, derivatives, etc. Or it could be an operating business. It could be, hey, we have discovered a really good use for this Bitcoin that we can generate a 7% annual return on the Bitcoin, right? I think there'll be people that back into using the treasury to generate returns. And then I also think these companies could become acquisition targets, actually for things like the big banks, or let's say we get into the Bitcoin future a little bit and Goldman or JP Morgan or Bank of America says, wait a minute, we need Bitcoin collateral. We actually need the collateral because we want to issue products or we want to perform functions that require it. And so instead of trying to, do a $500 billion twop into the open books, we're going to acquire the treasure company. And honestly, the delta between the slippage on us trying to buy $500 billion of Bitcoin, it's more than the premium, right? It makes more sense to just acquire the company and pay a premium or something than to try to take this huge order into the market. And so some of these companies could be acquired to provide the necessary collateral to the financial infrastructure that's needed. That's one angle. The other angle is that these companies could become financial institutions. And let's say in the future, not only there's Bitcoin financial products, but there are, let's say some percentage of international trade is settled in Bitcoin because Bitcoin moves cross border. It's able to kind of have these unique global properties. Typically, like, you'd have something like a correspondent bank that's doing it. So not every bank and every financial institution would touch spot Bitcoin directly. There'd be some institutions that handle that on the behalf of everybody else. And so I think that for that function and others, these treasury companies could be like, you think of it as the capitalization of future Bitcoin financial institutions that eventually serve that role in the market.
Absolutely. I mean, ultimately, I was going to ask you this, but it seems like the end game for these companies is to ultimately shareholders want every single action a Bitcoin treasury company takes to be accretive, right? Um, whether it's accretive through diluting, the equity holders, or accretive through issuing fixed income products. That said, any underlying operating business that doesn't take in Bitcoin revenues, if they use capital market proceeds in order to invest in that operating business, they're punished because all shareholders want is accretive dilution. They want more BTC per share. They want more BTC yield. And so ultimately, I think the winners over the next several decades and the people who ultimately become sort of these Bitcoin banks of the future who are issuing fixed income products and other short duration credit products and real estate products in order to satisfy institutional investor mandates and retail investor desires, while also having an underlying operating business that takes in Bitcoin revenue. They are going to be the biggest companies of the future. People say like, oh, this is a Ponzi scheme. What's the end game? Yada, yada, yada. Ultimately, what these companies are doing is they are acquiring permanent capital. This is capital that's going to sit on their balance sheet forever. That is the true hallmark of financial strength. I think as a country, we're starting to recognize that GDP going up isn't an actual barometer for economic strength whatsoever. Economic strength is more so a reflection of individual prosperity. There's no way to quantify that at the country level. But I think companies on Wall Street are beginning to realize, and you mentioned there are two major ones in the United States and two others internationally that are running this playbook, and that's it. So we're still very early in this. But I believe the end game will be a mass understanding that this is the direction we're headed, and these will become the largest companies in the world over the next several years and decades. And they'll acquire other operating businesses. They'll build new operating businesses solely to increase Bitcoin per share. In doing so, a large part of Bitcoin's terminal supply will just be off the market forever. And, we talk about Bitcoin banks. I don't think Bitcoin banks are so much the custodians of today. People consider, like Coinbase, oh, they're a Bitcoin bank. Well, no, not at all. Banks borrow short and lend long. All Coinbase does is they allow you to buy Bitcoin, other crap, pardon my language, and then it sits there, right? They don't issue securities off of that. They're not lending anything. And so ultimately, they're not Bitcoin banks. Bitcoin treasury companies are the first instance of a Bitcoin bank ever appearing, right? Because
Correct.
they are financializing the asset in real time. And over time, that's going to enable them, just like the JP Morgans of today, just like the Bank of Americas of today, just like all of the big four in the United States are the biggest company or the most profitable companies in this country, largely. There are a handful of them. I think Bitcoin treasury companies are on that same path to becoming these fully fledged Bitcoin banks that buy other businesses, scoop up other businesses that are accretive to their Bitcoin holdings. I completely agree. I don't know if you have any more thoughts there.
We share your view, right? Like, that is the end game, and the winners will be the companies that can generate actual Bitcoin cash flows from the treasury, that can back into these businesses where they're actually using the collateral to perform an active, valuable function for the market. Like, that is where this goes. And that is somewhere that I think we very much agree, and that's how we're thinking of it. And that's an important part of our strategy, and why we think this is an important moment. It's just like, yeah, right now, people want they want to capitalize these Bitcoin financial institutions. They want more coins on the balance sheet. Why is that? Because it's a lot easier to answer the question of, would you like to own 500,000 Bitcoin in 10 years? Or would you like to have this one product? It's like, no, I want the Bitcoin. Like, I know I want the Bitcoin. As far as which specific products will become the successful ones. The market will figure this out over time. But like we know we want the capital, we want the collateral. And so there's a race for that. And we're in that kind of capitalization phase of these future financial institutions. And obviously people are in it for different reasons and there's different companies and some of the companies are a cash grab and you have to separate operators, but that's the case with any big new theme. That's the case with anything that happens. Like from our perspective, that is how we think of it. And you made a really fascinating comment that I love on like you said like we value GDP, we don't value balance sheets or something like that. You said
Yeah, so
something along
we
those.
value GDP. Basically, like people have been valuing GDP as the absolute final measure of economic prosperity and individual prosperity, but it's not, and people are
Yeah.
coming around to realize that. And I think one a fascinating addition to this, and I think you'll have a lot to say on this, is that now that the fair value accounting rules have changed and that unrealized Bitcoin gains count as earnings. Ultimately, the most profitable play on Wall Street is to just simply accumulate Bitcoin, this asset whose compound annual growth rate is 35, 40%. And so Bitcoin is changing corporate finance. And I think it's part of a larger trend. It's why Bitcoin is so successful. It's because people are realizing these metrics that we've measured, whether it's at an individual level, a countrywide level, or at the level of just one single business. In order to value a business's health, we talk about earnings per share, and a company is valued not only on that but also on future cash flows. Same thing, it's essentially the same type of mental model we use when we use things like GDP.
So just on that real quick, that's where I was going. So there, you make an amazing point, and it's right now the only thing anyone cares about in public markets is your income statement. That's all. It's completely based off your income statement. Your balance sheet doesn't really factor into the valuation in the same way. It's not like completely ignored, but there's no multiple on it. You have a multiple on income. You don't have a multiple on your balance sheet. It's very income statement focused. And I agree with you. Like, I think we could be entering an era where there's a revaluing of the balance sheet, that the balance sheet is more strongly considered in the valuation. And it's not just the income statement.
Yeah, absolutely. I mean, this accounting rule basically changed the entire game. I mean, it must have been like the quietest story across all of America, but I think Strategy's earnings beat will go down in history because it was the biggest earnings beat in history. It was, estimated to be -3 cents or -7 cents per share. They were in like the $30 per share mark, earnings per share. Now that your Bitcoin growth can be counted as earnings, I think, Wall Street is beginning to understand that income isn't all that matters. It's a strong balance sheet that matters. I think Jeff Walton put it really well. It's like, okay, the future cash flow model, whatever. Would you rather buy a company that says, I'm going to generate X amount of dollars tomorrow, or a company that says, I have X amount of dollars today? Which one would you say is in a more financially strong position? And further, you mentioned it's all about operators. There's a going trend. You mentioned like a lot of people are saying, oh, we're adopting a Bitcoin treasury strategy. GameStop, Ryan Cohen, prime example. They buy Bitcoin, they sit on it. They don't execute the playbook, right? The playbook is constantly doing this issuance, right? In order to purchase Bitcoin, right? Whether you have an ATM facility, whether you're doing this through a pipe, whatever you're doing, ultimately the flywheel is to sell shares, buy Bitcoin, sell more shares, buy more Bitcoin. That's what the market values because slowly but surely people are beginning to understand that's the most profitable thing a company can do. Today, just like in the dot-com boom in the 2000s, there are very few companies that survived. It was a huge trend. Only the ones that were valuable and had good operators and good leadership who knew how to run, to generate value survived. Amazon, prime example. There were thousands of other Amazon clones. The only one that survived this dot-com bubble, this massive trend that everyone hopped on because it was profitable, was Amazon. And that was solely because of its value that it generated because it had good operators. So I think I want to ask you, I want you to speak to the importance and the significance of having a good leadership team and a good set of operators to run this treasury playbook instead of just compared to these companies who just do it because it's popular and they don't actively run the playbook.
So this is a point that I've made over and over again on Twitter. And I think most people probably agree with it. There's some people that just like will not admit the both reality and practicality of it. And it's basically the following statement. Treasury companies were always inevitable. It was always inevitable that this moment happened where people leveraged the entire financial system to acquire Bitcoin. Like we agree that any trajectory of Bitcoin involves this happening. And so then your choice is not, do treasury companies exist? You don't get that choice. They will exist. Your choice is, who runs the treasury companies? Are they run by Bitcoiners, or are they run by Wall Street, or are they run by opportunists? That's your choice. The financial opportunity simply exists. People will seize it. People will do it. You get to decide who does it. And it's not just, the reason I say that like I want it to be run by Bitcoiners is not just that like it's like a us versus them, or it's like a faction sort of thing, or home team. It's that A, I think Bitcoiners understand the asset. B, Bitcoiners value the asset. And C, I think Bitcoiners in most cases are like generally in this thing. They're generally fully bought in to the Bitcoin future. They're generally fully like, they want the Bitcoin world. And this is a lever that we get to lean on to help make this happen. And so like, I'm not that interested in a treasury company that is, run by some random group that just jumped on. I am very interested in treasury companies that are run by committed Bitcoiners with many, many years and cycles of Bitcoin experience that want to do this because they want to help Bitcoin adoption, and they want to also make sure that these companies that are going to have influence on Bitcoin markets, if not Bitcoin, are aligned with Bitcoin values, right? Like that's what I would want, and that's what you need. And not all of these plays are that. So, I mean, one reason I was very happy to join Nakamoto is like, it's the team is all true believers. Like it's Bitcoin's been our whole life in many ways, and that's who you want running these companies. Like the alternative is not better.
Absolutely. Bitcoiners who have been talking about this for ages, they fundamentally understand why Bitcoin goes up. Um, they fundamentally understand the Bitcoin ethos, and they operate their company as such. You need to respect the asset, but also have an understanding of where it's going and why it's going there. And those will be the most successful Bitcoin treasury companies that will inevitably turn into these Bitcoin banks, right? These entities who borrow short and lend long at scale. They securitize financial products backed by the Bitcoin on their balance sheet. They become the most popular, oversubscribed financial products in capital markets. There needs to be an understanding of the operator, of, let's say, your director of Bitcoin strategy, that this is an inevitability, right? And basically being able to understand the Bitcoin ethos and harness Bitcoin's power, not just like solely as a representative of the company, but as someone who has basically Bitcoin in their veins, right? That's why you've seen successful Bitcoin treasury companies and the ones that have failed. That's one of the biggest learnings. That's ultimately what it boils down to, right? Rather than these fair weather people. One thing I want to ask you is that Pierre
You need
Rochard.
you
Oh,
need
yeah,
to
go
be
ahead.
sure that the people running your Bitcoin treasury company watch 40 hours of Bitcoin podcasts per week. If they're
That's right.
not watching 40 hours per week, how do you trust them? You got to watch the Bitcoin podcasts.
There's no way to trust them whatsoever. Yeah. Ultimately, you want an operator who understands a speculative attack on fiat and where this thing is headed. I think we saw this in real time, and I've said this so many times. We hired a rocket scientist to find the highest IQ people in the country and direct them with as whatever funds they needed to find government waste and cut it, right? That would have been Bitcoin's death now. What on earth is the value proposition of owning a scarce asset if the government is fiscally responsible? A rocket scientist who hired several 170 IQ plus people couldn't do it. It's never going to happen, right? And so, Lynn Alden says nothing stops this train. Ultimately, other countries have it worse than us, but a credit-based world economic order, it's ultimately a foundation that will crumble. If your operator doesn't understand that, and if they don't watch 40 hours of Bitcoin podcasts a week, then your company will fail. I think that's ultimately what it boils down to.
I think people are mad that the podcasters won. I do think that's part of it. I say that a little tongue in cheek. Like I'm obviously kind of having a good time with that joke. But I think there's a real resentment that the podcasters kind of came up with this, but it's not a silly thing at all. It's funny because like the Bitcoin, there's so many influencers that have transited the Bitcoin to crypto space, and a lot of people like sold out to crypto. Like they sold out to a token or whatever, and they exited, and that was like their monetization. That was like, oh, like I'm gonna take the cash and go do this. And then like the Bitcoiners are the people that like stayed with Bitcoin. They stayed on Bitcoin education. They honed the skill at communicating Bitcoin and talking about it to audiences and etc. And it just turned out that skill ended up being very valuable. It actually turned out at the end of the day, there's value in being able to communicate Bitcoin and Bitcoin concepts to a global audience, and that at the end of the day, companies started to value it. And I think people are a little resentful that there was a time where people criticized Bitcoin for like, it's just all podcasts. Bitcoin's all podcasters. Where are the builders? Where are the builders? And it's kind of like, this is revenge of the podcasters a little bit.
That's really a great way of saying it. Yeah, I mean, Bitcoin podcasters, Bitcoin educators more broadly, they've been spending years and years and years. I mean, I left school a year early to join the Bitcoin layer with Nick and basically do this, right? To write research, to pour over 100 hours a week for 5 years straight into Bitcoin. And now ultimately, it just so happens that people who also chose this path have a skill set that's highly in demand from Wall Street, and they could be plugged into any one of these companies, run a strategy, and take a company from sub $100 million to a cent-a billion-dollar company. Revenge of the podcasters. That's a great way of putting it. Pierre Rochard said something, and I think you'll agree with this. And we kind of talked about this already to some extent, but every company in the world has a fiduciary duty to accumulate Bitcoin, not just treasury companies. We've been talking about public companies, the utility of doing this as a public company, what it can do for your balance sheet. But for the folks on Main Street, right, for the folks whose businesses have been completely hollowed out, who are essentially running on an extremely small balance sheet, basically all of their employees have no idea whether or not the business is going to close up shop by the time they get their next paycheck. Bitcoin has utility for them. And so would you agree with that sentiment that it's every company's fiduciary duty to have Bitcoin on their balance sheet, not just public companies? And if so, why?
I think in essence, right, like you can get a little complicated there, and I'm sure Pierre would agree that like, I don't know that it like legally you can make that, like you couldn't sue them for not doing it in like a legal fiduciary duty. But I think in essence, in essence, it's a real question. And in essence, like, you're really overlooking something by not doing it. But it's part of this larger not thinking about balance sheet, only thinking about income statement. Like this is this thing that like we just were talking about, but like people ignore the balance sheet. And this is a byproduct of fiat finance. This is an externality.
And it's the mistake that real estate investors make as well. People who buy up as many properties as they can. The number one desire, the number one career goal of Gen Z, people my age, is I want to be a landlord. Because all they care about is cash flow. It's totally warped people's minds and their definitions of value.
Totally. But it's like, yeah, I think the reason people don't think about it more is just because like everyone is focused on revenue and top line revenue and income, and they're not thinking about the balance sheet. And ultimately, like at the end of the day, the balance sheet is in many cases what matters. Obviously, if you have a shrinking or growing, like, it's not that income doesn't matter, but yeah, let me say, income matters, but the balance sheet matters way more than people act like it does today. And in some ways, that's because perhaps there are always these like lenders of last resort, or when you really do hit a balance sheet crunch, there's all of these financial methods to try to like borrow and backstop. And so maybe you don't really have to think about it. Maybe you just raise more money. Maybe you just go to the bank. Maybe you just sell debt. But I think that's a suboptimal way to think about capitalism. I think that's a suboptimal way to think about running a business where you're relying on this kind of availability of cheap money to cover up a weakness, a real structural weakness in your own balance sheet.
Yeah, absolutely. I I want to ask you, and this will be a great thing to close out here. What's on the horizon for Nakamoto? You guys have some extremely exciting news. I think by the time this show goes out, it's going out next Wednesday. We're filming this on Thursday, August 8th. Um, you know, it'll have happened. So what's on the horizon from you for you guys over the next couple of weeks and months?
Yeah, so we're still kind of in the tail end of this merger, so I'm limited on what I can say on a regulatory basis. Suffice it to say, we expect the merger to be complete next week. So by the time this comes out, we do expect that that'll be the case. So that'll be great. And what I can say is you're going to hear from us a lot more. We haven't been able to make announcements because of the quiet period. But once we're through this transaction, we have plenty of stuff that we're very excited to share with you guys. So it's going to be good. Follow the handle just to keep up to date. But as soon as as soon as our transaction is complete, we've got many, many things to share.
I love it. I can't wait. I can't wait to see what you guys do. I suppose one last parting thought. There are a few treasury companies in the United States. There are a few treasury companies who are in other markets. This is I suppose this question is twofold. What other markets are you looking at right now on a personal level, not on a company level, that are sort of ripe for a Bitcoin treasury company? And also within
Yeah.
countries who already have a preeminent Bitcoin treasury company, what are the distinguishing factors that they can have to succeed? Apart from them being the only ones in the region, that's now not a thing for people who are making other treasury companies. Does it solely come down to who's running the strategy, or are there other differentiators that people aren't considering yet
Yeah.
to run a Bitcoin treasury company in a country that already has one?
Yeah, so I mean, if there's already a treasury company that is in a dominant role, obviously there can maybe be a tiny one and you can supplant them. But if there is like actually a market leader already, you need to either have like a differentiated strategy. You need either a differentiated cost of capital. I mean, it's one of the two. It's you either need to have something unique that only you can do, or your cost of capital has to be lower. Your distribution might have to be different, but you either need I mean, it's really a question of where you're getting your capital from and can you improve it over the big player, or do you have some sort of distribution advantage that'll matter, right? So it's definitely harder to be number two. Though, I mean, in the US, obviously we're not number one, but I think we have a differentiated enough strategy and access that does make it unique, as well as synergies with you know, media and other properties. But as far as markets, there's still a lot of very large capital markets left that are not really, I think of Brazil, I think of the Middle East, I think of India, I think of making more headway into Hong Kong, I think of Asia, many countries in Asia. A number of European countries remain. I think of Argentina even. And so there's kind of first mover there. And then there's also proliferation of products. So it's getting the preferreds in Japan, getting the preferreds in some of these other regions, as well as there will be more. This is not the end. There's not equity and preferreds. Like dozens of more securities will be created over the next couple of years is my honest belief. So you're going to see a lot more of this come to market. That innovation is not done. We're not there yet. There's going to be I mean, I think there will be a very large number of Bitcoin based securities.
Beautiful. You love to hear it. More paper Bitcoin, where that came from. Steven, thanks so much for coming on the show. If people want to find more of your work, where can they find you?
Find me on Twitter. So just Steven Lubka, look up my name. I'll come up on Twitter. Very active on there. My DMs are open if you have questions. Follow Nakamoto to keep up with everything we're doing. And I hope you have a great paper Bitcoin summer.
Excellent. I appreciate it. Thanks so much for coming on the show, Steven. And if you are interested in seeing more of these episodes, make sure to check out our X handle or our YouTube channel. It's just Horizon. You can search that up on YouTube. You can find it there. And make sure to stay tuned for the next episode. Thanks, Steven.
Yeah, man. Absolutely.